Welcome to the Engine Markets training session. Meanwhile, others are joining in. We can start taking a look towards what we are going to discuss today in our training session. So let's go ahead with our next slide. So today we are going to talk about, how you can review the market in our market overview tabs, and then how you can, take a look towards thematic funds, take a look towards the category of the thematic funds, and then compare them and add them to the portfolio or model portfolio, or even to the client's portfolio itself. So let's head towards our terminal of engine markets, so I can start with the session altogether. So yeah, if it is visible to everyone and my voice is audible to everyone, please let me know so that I can address that if it isn't. So accordingly, as you can see, this is the overview, which shows you the entire, overview of the markets, and you can, certainly compare multiple sets of indices altogether. So, we are going to compare some major indices in front of you. Let's say we compare a Nifty 50, BSE Sensex, and BSE 500 as well. Now, one important thing is that every single market level is going to have a different set of level. So if you want to compare them effectively, all you have to do is to, rebase the entire levels up. So before, rebasing it, let's, select some equity sectors in Indian equity sectors to compare them with our major indices. So let's go ahead and BSE, and let's select BSE Healthcare, and in NSE, let's select Nifty Pharma and Nifty IT. So now, as you can see, multiple sets of market levels has been added, and they are actually having a different market level altogether. If I zoom this in, you can see that they start from a different, points. To rebase them up, all you have to do is just click on this particular button, a rebase button, and it rebases the entire data sets of all the market level in one single go. And easily you can actually compare them up in one single go. So let's say I want to compare Nifty Pharma and S&P BSE Healthcare. So all I have to do is I have to just click on them, and they get, offboarded from the system instead of, doing this. And you can certainly see that, this is what the market level has been based on the rebased manner, and you can easily compare them. And here you can change the dates accordingly. So changing the dates is very easily doable here. You just have to click on them, and based on that, every single rebase dates start from one single start date, which is 2015 January. Now here, there are a couple of things to be aware of. One is the screenshot button, which will help you to get the overview of whatever analysis you have done from that particular start date. And one important thing is the BSE tab as well. So sometimes NSE is activated. You can actually select what tab you want to do in the settings section. We are going to head in there later down the line. And here you can look towards the best NSE or a BSE sector. So accordingly, let's say we want to look towards the best BSE sector for the last 12 months. These were the best sectors altogether. And even for the NSE, you can just click on the NSE and you can see the best sectors in NSE as well. So that is how this, targets up. And you can take a look towards the 6 months, 3 months, and the 1 month as well. And this all can be screenshotted. So you can screenshot one single tab, the best sectors altogether, if you're looking for the thematic fund. So essentially, first we are looking towards what's going on in the market. Then we can, take a call on what kind of, categories we might have to look into when we do our research. So this is one thing which you can, take a look towards. And then we have world equity markets as well, only to give a comparison that how, how our Indian equity sectors and, the main market levels are, faring against some world markets like, S&P 500 or Dow Jones or Nasdaq, or maybe FTSE. So this is what you can, take a look towards while doing the overview. Now, the main thing here is that you can also wrap this entire selection in one go. To wrap it up, all you have to do is this: click on this market wrap. And one important thing with this market wrap is that whatever you select, even a zoom in function, that can easily get recorded in this function as well. So let's say I zoom this in, only that particular zoom will be added into the market wrap. So let's say I load in another market wrap. You can see this is what it is shown in the picture below. So this is very, very dynamic when you create some market wrap functions within the overview. And every single data set, wherever you see this, small buttons, they can be exported in Excel. So whenever you require to download all the indices from 2015, all you have to do is just select those indices if you want, even in the Indian equity sectors, and just click on this export indices in CSV. And that's where you can download them in one single go. That is one thing. We can, as you can see, all of them are actually added into the system. I hope the Excel screen is visible to everyone. So this is where you can take a look towards in your own customized way, that this is what the market level is from 2015 2nd Jan. So this is how the overview works out. We are not going to talk about macroeconomic data too much in this session, but I'm just going to give you just that if you want to compare macro data a lot, within the country, all you have to do is just click on this. So you can compare government bond with all other countries, and you can also click on the historical, so that you can download the historical data in one single tab. So this is what the overview is all about. Let's head into our main section, where we can actually take a look towards thematic categories. So the essential section is in the fund section. I'm going to head into the category averages first, so that we can take a look towards one asset class one by one. So let's say we are today our use case is only equities within the thematics. So you can just select only equities as of now with a direct or a regular plan, which is as per needed. And then you can take a look towards certain parameters which can help you to understand what kind of risk we are indulging in if we are going for thematics. As a matter of fact, I'm just giving you an example, like uh, historical value at risk. This means that there is a 5% probability to have such a drawdown. Right now, this is an average of the entire category. If I click on let's say one of the category, let's say let's take a call on sectoral pharma. So these are the 10 funds which are involved for this category averages, and this is what the average historical value at risk is. So you can click on it, and you can see these are the underlying funds which contributes to this average altogether. So in an average, you can have such a loss in sectoral pharma. Now this is very useful, because let's say you're indulging in thematics, you would definitely want to look towards the downside risk. Now you can see, as a matter of fact, if I click on this in a descending order, ascending or a descending order, as you can see, this is a descending order. You can see sectoral banking is one of the riskiest, and you should also take into consideration the count of the funds, because sectoral auto only consists of one fund, which is not an average altogether. But as you can see, you can click on those on the sectoral banking, and you can see what kind of var, historical var, we are actually having for these all funds. So UTI banking is one of the highest as a negative drawdown probability. So this shows you the 5% probability that UTI banking and financial services can actually have such a drawdown. And another important thing is that if you're looking for calendar years, which is also useful in one way, that what kind of sectors, how the sectoral funds have performed in the calendar years. All you have to do is just click on this and just drag it a bit in a sideways. Sometimes some advisors are not able to navigate this thing up. So all you have to do is just drag this in the right side, because there are too many data points here, and we can actually see for 2021, 2020, and for some calendar dates, calendar years, we have added it. So as a matter of fact, let's take a use case in 2020. Sectoral pharma and infotech were the one of the best performing funds as an average, and you can also check for 2021. So now in 2021, it's actually a small cap fund. You can click on them and you can see what kind of funds are there in the small caps. So it's pretty easy to compare to see what kind of risk we are indulging into. And if you're looking for the sectoral and the thematics one, then you would definitely want to take a look towards risk, because as in the thematics brings in a lot of risk. So this is where you can also get a proper idea that if you're going for banking, sectoral banking, there is a risk which is involved, right? And you can also take a look towards multiple set of data parameters and download them in particular Excel. Now, this will be useful if you want to do Excel-based analysis for the sectoral, category averages altogether. So next is the holdings analysis. So I'm just gonna give you a gist, but before going ahead to holdings analysis, there is a way to add funds to the compare section through category averages. The way is that, let's say you want to add all the infotech, sectoral infotech. You don't have to go to the compare section. All you have to do is click on them, and you just have to click on this. So click here to transfer all the funds to the compare section. I'm just going to give you a demonstration here, and all the funds gets added into the compare section. So let's get back to the holdings analysis, where we can actually see how the sectoral changes has been for the entire industry of the mutual funds, all the AMCs, and also for singular equity categories. So first we will take a look towards this particular data set, which actually narrates that 20% is the average holding of banking in all the mutual funds. Now this is a fund in consideration as of now. You can see these are the considered fund for an average, and if you click on this 18.78, this shows you that these are the funds which contributes to have such an average, the entire thing. And you can also see the highest amount invested in crore. So you all you have to do is just click on this, and you can see one of the highest is Kotak, and then Mirai and ICICI Pru. Now this is for one single sector for the entire universe of the mutual funds. But what about one single sector? Like, what about one single category altogether? All you have to do is you just have to come here and just select that particular category. Now let's take a use case of sectoral pharma itself. You would want to know what is an average sectoral pharma. I mean, in the funds there are definitely different types of sectors as well. Even in the pharma as a thematics, we would definitely want to know what is an average pharmaceutical exposures are there in all the pharma funds. And that is where you can understand that on an average some pharmaceutical as a sector is 75% in this in this growing year. So this 12 months, and you can see there is a healthcare agrochemicals. Before it wasn't there as an allocation, but now for the last 5 months, 6 months, you have allocation for agrochemicals. You can click on them and you can see there is one fund. So now the importance here is that in an average, what kind of funds are involved here. So you can see some of the funds have 82% of allocation in pharma, some of them have 63. So it makes sense to take a look towards what is above average as pharma, as per the entire pharma sector, and what is below average when you take into consideration of the allocation these funds are having. So this is very useful not just for pharma, but you can actually clear this up and drill down any thematic funds, like let's say infotech. And you can essentially see that on an average infotech goes to 65-70% of the allocation, and then it goes to another sectors which includes telecom and entertainment and e-commerce. You can actually click and see if the funds are involved are many funds or not, and here it shows you the funds taken into consideration. So it's a very useful use case. You can also click on this value rupees invested in crores to see how much of the invested value it has been going into the IT software through infotech. So you should be aware that if there is something written here, then that is only for that only SEBI category. If you clear this up, then it shows the entire pool of all the funds considered in equities. So this is the asset classes which we have chosen. So that is how this works out. And you can also filter the holdings type, which is not a use case today, but you can also filter it altogether to take a look towards different set of assets there in those mutual funds. So now this is what the sector changes is all about. And you can, once you are done with this, you can effectively do a screener for all the sectorals. So the screener is basically, it is a very robust way to, take a specific, methodology and come up with some of the, list of the funds, so that you can start your own analysis and view it in a technical or a fundamental way. So what you can do here is you can filter the category. So filtering the category is very easy. All you have to do is just click on this. And once you are done, you can just select the category altogether. Uh, uh, yeah, one thing to know, is my voice lagging to everyone? I just got a chat. If not, please message me in the chat if it is lagging.
Umair is
Okay.
coming through fine over here. So
Okay.
it looks okay. It looks fine. You can continue.
Okay. So yeah, so in the filter categories, what you can do is you can select only the thematics. As of now, this is what our use case is. So we are not sure which sectors we are going to go. So what we can do is we can just take a thematics as an overall view. And then once we cancel this up, this is what our entire set of thematics are. And all you have to do is you just have to be aware that we are showing top 100 or top 300, so that you can include all the funds involved in that thematic category. Then you can also take a call on what kind of filtration you would like to apply. So I'm just applying a random filter, but you can do it with your own filtration. Let's say we go for 1500 crores, right? We type in an age, a random age is 5, and we want a good sharp ratio because it's a risky category altogether. So we can just take it like 0.5 in equities. And we can also do this one important return column, which is very, very useful. Let's say we are going for 5 years. So I would definitely want my funds to be minimum at least giving me a 12% return. That is, you can give your own criteria as per needed and apply this. So there is no need to apply all the filters. You can just apply a couple of them and still apply them and get those funds in place. Now these are the only funds which actually fits your criteria. And you can make more criteria. You can just export this to Excel, and you can make another criteria and export it again and again. So you can make multiple sets of criteria as an apply filter, and these are all your filtration methodologies. Then once you are done with this, you can just add those entire securities into the compare tab. So it's pretty easy to do this. Once I've done, I'm just going to remove some of them. Just a moment. Yeah. So once you add these all those funds, right, then you can start your comparative analysis. So today our topic is not about comparative analysis, but we can definitely look towards some comparison, so that we can actually take a call on one of the funds, that if those funds are actually good for my client's portfolio. One thing for sure is, once you are done with this, you can save this list. So I'm just saving this list, save one, right? So that next time if I want to onload such a list, I can easily onload that. So I have actually saved it couple of lists. So I advise everyone to do this, so that you can ease your process in this screener tab. And then you can choose multiple sets of funds and take a look towards different set of analysis altogether. So let's say we are taking a call on only one a couple of sectoral funds. So which funds are best is the question. So this is a very subjective question, but you can actually get a proper overview in rolling analysis, that let's say based on the risk of the 260 days rolling window, we can just see the return upon wall and run it. And based on the annualized basis, which kind of funds are giving me a highest return upon wall. Because essentially I'm taking a lot of risk, I would definitely want a high set of returns altogether on them. And I can choose my top 5 based on that, maybe an average. So this shows you that the return upon wall is on a window of 260, and it rolls in every single day. So you can see sometimes the return upon wall of Mira asset is 2.48, but sometimes it is truly less, which is less than 2.48. So you can see how low this return upon wall is at it has been. So for ICICI Pro Technology, the risk was too much, that the return hasn't been giving that much of a return, altogether return upon wall. So this ratio will give you a proper set of idea that what kind of risk versus return you are taking as a ratio you considered in. And you can actually do another volatility analysis. Now volatility analysis is one set of analysis which gives you an idea that for every 260 period, for every data point, for every day, what is an average of all these data points. Because I do not want to have such a fund which is having a truly high average, or maybe I do not want to have the volatility of the volatility which is very, very high, which changes altogether. So you can take some consideration from rolling analysis, and then come up with some top 5 to top 3 funds in the thematics for your client's portfolio. Once you are done with this, you can actually take a call on risk versus return and see what kind of risk versus return you can actually take a look towards. And one single best idea is that what you can do is you can add in the client portfolio. Now why this is very useful, because let's say we are taking a look towards a prospective client, right? And we want to give this client a proper set of thematic fund. So what we can do is just a simple risk versus return analysis can give you an idea that if there is no report in India, let me just delete this up, right? Now we want one sectoral fund for my client. What I can do is, let's say in a pharma category, I can add the pharma, all the pharmas, right? So I know that I can add them or I can clear the list. So you can add the, only all the pharmas into the list. Once it is added, all the pharmas gets added. Now what you can do is you can go to the head to the risk return chart, And you can see that these are, some of the pharmas are actually, given here. So these are the pharmas which are given here. So you can just see that these are the funds what the client holds, mid caps and the growth funds and all those funds. Whereas most of the pharma and healthcare, as you can see, are here. So this is the universe you have. You can just zoom in this universe, and you can just see which are the risky assets based on the tab given here. You can just remove some of them in from the main list based on the year. So let's say I'm removing ITI Pharma. The reason behind I've done this is to increase the date and risk versus return chart. So I can just go back to 2019 and just check it out myself, and then I can take a call as to in this universe what kind of funds are actually appropriate for my client's portfolio. So you can ping in maybe Nippon Pharma, but if the client is inclined towards a lesser riskier asset, in altogether you can go for DSP. And this is how you can take a look towards, because this is what the client holds. This universe is actually taken into position by the client. So this is how you can take a look towards. This is the client portfolio, and entirely this is the entire set of all the pharma you have added. One another thing you can do is, this is the underlying assets, but what about the allocation? How would I add a portfolio with an allocation? So you can essentially make a custom security out of it. So let's say I'm adding a custom security of that client itself. So any of the client works out. I'm just giving an example here. So now this is the prospective client, which accounts for all those mid caps and all these funds, which is this one right now. And what I can do is I can just do the risk versus return chart. Now, where is my prospective client? As you can see, this is where my prospective client is. So essentially, the prospective client is having a very low risk and a low return chart. It is in here in this domain. So definitely you can see these assets are the riskier ones for the prospective clients, and that is how you can take a look towards the portfolio with the underlying security and all the recommended securities in one single place. So this is what you can do, and essentially then you can try plugging in those funds into the prospective client portfolio just by doing this. So I'm just adding this client portfolio. All you need to do is to add the portfolio from this add button, and essentially you can plug in, remove some exposures from some, let's say a pharma exposure should be removed, and Tata Digital India to be added. So you can easily add that particular fund into the place. So this is what you can do with the analytics altogether, and you can run this up. So this will hypothetically run this up and show you the performance, and you can compare the performance of the previous fund, original fund, with this new original portfolio with this new portfolio altogether. So making a custom security, I'm just giving a brief here. To make a custom security, you just have to download this and copy this price series into the my securities. It's pretty easy to do, and that is how you can compare multiple sets of assets and even the portfolio in one place. So all I have to do is just copy this and paste it here in the tab. So in this my security tab, I just have to paste it and just write it portfolio test, and we are done with the equity. So we validate this, we save this, and it gets added into the portfolio. Now you can easily add that portfolio into the compare tab. So that will be a more accurate portfolio, because that actually had some securities which we added into the compare. So once I go back to the compare, I'm just going to remove this prospective client here, and I'm just going to add this test portfolio altogether. So I think this is the portfolio. Just a moment, just a second, I just have to check which portfolio it was. Portfolio test. Okay, so it was a portfolio test. Okay, this one. So this one was the portfolio, and once I add them into the risk versus return chart, yeah, you can actually figure out this is where my portfolio test is. I mean, all together with all the exposures with Nippon and every single thematic exposure, this is my portfolios. So you can essentially, this is where I underlie. So essentially you can actually add multiple sets of portfolios as well to compare your own strategies. So that is what the entire session is for today. We can start with the Q&A sessions, and we can then address your queries. So you can just write us on chat, and or maybe verbally as well. Are there any questions?
Sir, can you repeat it once again? You are going fast, so it's unable to catch up.
Sure. Sir, which portion should be repeated? Can you just elaborate so I can
This
just,
how to make a portfolio.
okay. Okay. So you want to add portfolios into the risk versus return chart, right?
Yeah.
Yeah. So essentially, adding a portfolio from here, let's say we have added couple of securities. I'm just giving a very brief example here. So let's say I'm creating a portfolio altogether in front of you, right? So right now I'm just giving an example. This is my portfolio which I have. So this is a test portfolio, what you can create from our system. Once you create this, it gets added into our system. Now what do you want is you want to compare individual securities with the entire portfolio as well, with the weightages. So as you can see, this is the weightage we have, and we want to compare Nippon individually with the portfolio. That is what our essential plan is, right? So first thing what you can do is you can add this as a price series. You can download this as a price series. Once you have done that, one of the Excel gets downloaded from here, right? And then you can save this price series as a custom security. So custom security, this gives you a proper ability to copy this price series. One thing to be sure is you just have to copy the price and the date and not the returns. So I'm just deleting the returns altogether. So once I do this, it gets added into our custom securities section, right? You paste this here, you make a any portfolio name. So you can just write it portfolio test one, right? Just one, right? And I just keep as an asset class, validate the input, and save this as a custom security. While it is saving, right, we can go back and onload one of our portfolio, this same portfolio from our portfolio section. So I'll just show you how it goes on once it is saved. So this is our portfolio which has actually been added into our system. This is what the price series looks like, right? Now once we go to the compare, I'm just gonna remove everything, right? And I will add my test portfolio, which was the initial portfolio with the underlying, funds which it had, right? These are the underlying funds. Now you can see the risk versus return chart for the underlying funds, but not for the portfolio, because portfolio was essentially with some weightages and had some price series. So what I can do is I can just select this security here, and I can just check where my portfolio test is. So I just have to recheck the name again, test portfolio. Okay. Okay. Just a second. 1 minute. I think I might have missed out a moment, sir. Okay, from here. So portfolio test. Okay, got it. So this is the portfolio test we have. This is the portfolio as a price series which was added. And once you have added this, you can actually do a risk versus return. So essentially, let me just remove Tesla. I added another one. Sorry. Uh, okay. So you can just add the portfolio test from here. Yeah, this one. Once this is added, you can see the portfolio test added into the system. And then you can do the risk versus return. Now, essentially, you can see where our portfolio underlying this place in this entire universe. This is our portfolio, and this is where the securities which are given here. And not just this, you can actually add in an index as well. So let's say we are comparing Nifty 50. As a matter of fact, currently right now, so you can come back and see based on Nifty 50 is here, our portfolio is here based on the risk and return, and these are the underlying funds based on this particular start and end date. We can change the start and end date to see the momentum for the risk and return, to see if they are coming in that domain or not. So as you can see, this is portfolio test, which is always here in this domain altogether. So this is everything is relative, because the graph shows you the highest and the lowest risk and return chart altogether. So if you zoom this in, you will see relatively we are the conservative, we are in a conservative domain, and in a relative sense, Nippon India is one of the riskiest altogether. So that is how you can do it. Are there any other questions?
Thank you, sir.
Yes, sir. Your voice is not audible. If you are not able to speak up, we can you can just write us on the chat. We can try to address from the chat as well. So if there are any questions, please let us know.
Yeah, can you hear me now?
Yes, we can hear you.
Hello.
Yes, sir, we can
See,
hear you.
this
Please
is
go ahead.
other than the training. So other than the
Okay.
today's training, when we create a certain portfolio, right, and we go and check the concentration and the contribution of the performance of the each security or each mutual funds or any direct equity. Can you just elaborate those numbers? Suppose returns of the portfolio is X. In that AX, which is the highest contributor, middle contributor, and all that as a sample, as an example.
Okay. Sure. So do you mean by this? When you hello?
Yes, exactly.
Yeah.
I want to understand these
Yeah.
three numbers. Maybe benefit for all also.
Yeah. So basically, the contribution analysis, it shows you the return contribution of that particular fund. So as you know, the entire return contribution is 156%, but the allocation of that particular fund is 23.007%. So even if the contribution, total return contribution will be high. Yeah. Hello.
Can you be a little slower, if you don't mind? One second.
Yeah, Umair,
Yeah.
let me go through this one.
Okay.
So basically, the first table on the right, if you focus on that, that number is the total return. Now, when we say total, that means over the entire period, right? So even below that, just scroll down a little bit. Yeah. So we are focusing at the bottom panel. We are focusing on one of the contributions, which is from Nippon India Pharma. So you can see the total portfolio return is 438. This fund performance is actually better, 680, but the allocation of this fund in this portfolio is 23%. Right? So that has given you that number, which you can see on the chart, 156. Now, this may not make that much sense because we're looking at cumulative numbers, which is why we've given another column here called contribution to return out of 100%. By 100% means we take the entire return of the portfolio and say what portion of the total return of the portfolio has come from Nippon India Pharma. And you can see 33.89% of all the portfolio returns have come from Nippon India Pharma. So that's a big contribution. So obviously, if you remove this from the portfolio, it will have a pretty adverse effect. On the other hand, if you scroll down here and look at some of the other ones, like who are contributing 3, 4%, you could easily replace them without having too much effect on the portfolio returns. So here it just gives you an idea of what has contributed how much proportionally to that to that portfolio return. And as you click on any of these bars, as Umair is clicking, you can see the bottom chart shows you just the chart of that individual component. And you can see what what that component has done, which is that this fund 540% that you can see. And you can see what the allocation is, obviously 3.85, that is up there also. So that's basically the use of this section. You can very easily figure out what has really contributed properly and what has not. And one more thing you can do here is, Umair, if you just scroll up a little bit, you can change the start and end date to get a better idea. So maybe you focus on the last couple of years or just pick any period. So you pick that period and you say, okay, during this period, what does it look like? Now we can see during this particular period that we have chosen, in that period, it was actually DSP midcap, which was the largest contributor to performance. So this can really help you understand what helped you perform during different periods of time as well.
Yeah, just put on the graph, just put the number, that number of DSP midcap on the, yes, it is showing some number there, 12.52%, correct?
Right.
How do you correlate this number on all these number of the charts, total returns, then
okay, so 12
contribution to the return out of 100%?
Yeah, so even if you check it on a calculator right now, so 82% is this fund's return. So if you had just invested in this fund, you would have got 82% over this time period.
Correct. Correct.
Now we have allocated 15.16 to this. So if you take 15.16% of the pure return of the fund, you will get 12.5.
Okay.
That's that number that you see.
Okay. Okay, this is related to the particular fund as a contribution, not to the total portfolio contribution. That's 12.5.
Right. Yes.
Fund is about 82, of which 50% is a contribution. 50% of 82 is 12.5. Correct?
Yes, 12.5. And that 12.5 number, happens to be 23% of the total portfolio return.
Okay, right. This is a number here on the extreme right side of the column. Contribution to the portfolio.
Exactly, because if you divide 12.5 by, just scroll down a little bit, if you divide 12.5 by 53.26, you will get 23.7. So the number in the blue column, where just hover over the blue column, that is the contribution in absolute terms, 12.5%. That is 23% of the total portfolio return, because the total portfolio return is 53. Hope that explains it.
So there is another question. Can you explain about how to compare customer portfolio with model portfolio? So
maybe you could go through the client section. Go through the client section, copy a client to the portfolio section, and then
So okay. So to compare, customers' portfolio. Yeah, hello. Yeah, hello.
I think I did my question. I did read that question which sir was explaining. If you don't mind, can you give me just a minute so that I can clarify it completely?
Sure.
Yeah, so just come back to the same portfolio contribution.
Okay.
Selecting the DSP midcap, what it is showing is that total portfolio returns is 53.26% when we looked at the the contribution of the performance. Correct?
Yeah, so that was, we chose some random dates on the top. So I don't know, just choose another set, I guess.
Just select some other one. So
Some other one.
this, yes.
Yes, sir.
Okay. Now, total portfolio return is 14.5%, which I can see. It means that this the portfolio that you are showing right now, this is growing at the speed of 14.6% as a portfolio. Am I right?
Yeah.
Okay. Now, coming to the second question for better understanding, DSP midcap, which has got say 15.6% of the portfolio,
Yes.
right?
Yes.
Is contributed actually how much? 33% of the total portfolio returns, of which 14.6%. It is saying that 33.4% contribution is out of 14.6% is a contribution.
Yes.
Am I right?
Yes.
Okay. Third question is that you're saying this number 4.74% is nothing but 15% of 15.16% of the portfolio versus fund 31.6 is 4.74%. Correct?
So yes, 15.16 multiplied by 31.26, you'll get 4.74.
Hello?
Yeah. 15.16 multiplied by 31.26, you'll get 4.74.
Done, sir.
Yeah.
Yeah, thanks a lot. I got the points. So I can go for the next question. Thank you very much. Thanks.
Okay, go ahead, Umer. You can show that client. Just bring the client
Yes.
to the portfolio section and then compare.
Yeah. So, to compare the clients as per the question, as you can see, you can add any clients to the portfolio section by just clicking on this, copy this client to the portfolio section. Take another client here. Yeah. So once it is done, you will see this is done. Check in the portfolios. Then you just have to come back to the portfolio section. You just collapse this all and you will see from clients. So this is the folder we have to, check into. So this is from client, which is this client, right? So now currently you can run this client if you want, but currently I'm just moving this into active as of now. Now what I can do is I can go into the compare to portfolios, add this client, which is this particular client in my left side, and then I can add my own model portfolio. So by the way, to add a model portfolio, you need to actually add a model portfolio from here and save it. Once you are done with this, you can add it right in the right side. So I'm just adding a model portfolio here. Just a moment. Yeah. So as you can see, this is the model portfolio I've added in the right side. Whereas you can compare your model portfolio with the client portfolio, and this is the comparative performance. As you can see, the performance analytics, the annual return difference, and couple of differences in the analytics based on volatility and the return as well. And you can also do several comparisons based on asset allocation, exposure comparison. As you can see, these are the individual exposures, and then you can do the rolling return comparison plus the drawdown comparisons as well. So as you can see in this particular chart, the recovery days are too high in this particular model portfolio, in this particular client portfolio, whereas we have a lesser recovery days on an average. So you can create it as a PDF, and that is how you can compare a client portfolio with your own model portfolio. So creating a PDF, you can let's say the client has 50 lakhs to be deployed in your portfolio. All you have to do is just click on this and click go, and that is how this portfolio gets generated in the system. So this is the portfolio reports. You can use it to share your clients, and this is what I was talking about. Why 50 lakhs? Because this is where your entire corpus will actually get ahead in this model portfolio. So this is how you will allocate if the client goes to this model portfolio. So I'm just gonna zooming this in, and you can see this entire comparative analysis for the portfolio. I hope this answers your question.
Yeah. Thank you, Umar.
Are
And
there
one
any
more
other
thing.
questions?
Yes, sir.
Yeah. Yes. Yes.
Then there is an option for a better portfolio. I have to One option is that for making better portfolio, that is written column, rank versus written, volatile. Can you explain
Okay.
that
Do you
option?
mean, ma'am, do you mean improve portfolio?
Yes, sir. That's it.
Okay. So improve portfolio is the button which helps to take a look towards improvement of the asset allocation of the portfolio. You can
Okay.
click on this improve button here. As you
Okay.
can see, this is the input data from the start date, and there will be
Okay.
6 sets of models which will be generated. 6 subsets essentially gets divided into two sets, which is a ranking model and a value model. So in this, what it essentially does, the gist of this is that this is the original allocation the client has, right? And
Okay.
based on the returns, rank returns, this is what the allocation is given by our ranking model. It is a concentrated model which shows you that the annual return is generated as per 13.14%, and volatility is also increased. So accordingly you can take a call on different sets of models. So essential gist is that uh, within a minimum wall, it allocates highly to that particular fund, which contributes highly in minimum volatility for the portfolio. And for the rank sharp, the contribution of the sharp should be high. So for that, you need to allocate 40% or some set of percent higher in HDFC small cap fund. So this gives you an idea that based on the sharp minimum wall or returns, which set of allocation can be given to the portfolio. And whereas
Okay.
in the value model, your entire set of distribution of allocation is more diversified. So you can see instead of having a 40%, there is a lesser distribution and more of a balanced approach to the entire portfolio. But the main remains the same. As you can see, HDFC small cap is also having a higher allocation in bank returns, whereas in return value, it also has a high allocation as a number one allocation. So this is how
Okay.
you can save one portfolio and then compare it with the original portfolio.
Okay. Then here, how to select this one, sir? Ranking returns model into that customer portfolio. How to compare
Yes.
this
So
data?
if you want to compare it, you just save it as a optimized portfolio. You create it. So another set of copy of this portfolio will be saved in the system. If you want to see the copy, here it is there. It is there in the improve here. This is the optimized version, and I am just gonna add it active here. So if I want to compare this original portfolio, this is the original one, and the optimized portfolio, all I have to do is compare again. So this is already been here in the left side, and in the right side I can add in the improved one. So improved one is optimized one, which is this one.
Okay.
And that's how, instead of ICICI Pru, my allocation is in HDFC. So I can gauge the performance, and you can see a huge difference in the performance just by optimizing it by one button. So that is how you can use this two comparative parameters with improve.
Okay. Okay. Thank you, sir.
Thank you. Are there any other questions? Okay, it seems like there aren't any questions. So we should wrap this session up. We will, come again next week with another topic, interesting topic, and then we can meet up. So our next weekend tentative is Friday, 4 o'clock, same time. I request you to visit our webinar again. And thank you so much, everyone, and have a nice weekend.